One can find the right buyer for a truck 22% more if they are signed onto CARGURUS. Roku is partnering with Walmart to include a shopping experience in their on-demand video streaming. And Icon plc has over 30 acquisitions and counting. Besides the regular Tesla and Amazon, some growth stocks have a chance of doubling your money. Here are the 5 best growth stocks to buy now tips. Let us begin. Number 5. Roku. Roku, a video streaming platform, is still one of the leading tech stocks. In fact, hedge funds like ARK Invest hold close to 40% of their fund total in the streaming service. In the last few months, Roku has lost about 3/4 of its stock value due to the general tech stock decline. However, it is sold at almost $100 per share, emphasizing its worth amidst inflation and recession fears. Moreover, the company grew more than 3 times in a single year, 2017. Then the lockdown shot it up from $512.8 million to over $2.76 revenue. Currently, Roku has an over 40% annual growth rate, collaborating with Walmart to introduce an e-commerce section while streaming videos. Chief Marketing Officer at Walmart, William White, said, "No one has cracked the code around video shoppability. By working with Roku, we're the first-to-market retailer to bring customers a new shoppable experience and seamless checkout on the largest screen in their homes, their TV." The ad-driven strategy of Roku, and including these new on-view ads, shows an excellent way to make more revenue. Walmart, the world's largest parent company, knows all about data analytics and retaining customer relationships. Another $2 billion company, CLARIVATE, excels at this. We will share more on their stock projections shortly. Number 4. AGNICO Eagle Mines. Aside from Newmont Mining and Barrick Gold, AGNICO Eagle is the largest gold producer in the world. The firm recently merged with Kirkland Lake Gold in Ontario, Canada. Their entry makes them the largest gold producer in Canada. That brings their operations to 4 countries: Australia, Finland, Mexico, and Canada. The $10.7 billion merger has expanded the AGNICO business to 3 continents and will soon see their report more than the 661,000 ounces of gold they produce. Experts anticipate a 3.4 million ounces production at the end of 2022. In fact, the company expects to make $2 billion from the Canadian merger in the next 5 years. If AEM does not represent stocks to buy now, I do not know what does. According to them, each $100 gold price increase would advance their margins by $300 million. Since their debt net is $500 million, we could confidently call AEM a solid stock for anyone asking. Number 3. CLARIVATE. With over 50,000 customers in 180 countries, CLARIVATE, an information and data analytics company, is slowly rising to growth stock prominence. The company reported that it made only 21% of single transactions and 79% of its $1.88 billion sales revenue from subscriptions and recurring sales.
No, they're the same people. They're all the same.
Any expert will tell you how important it is that a young company maintain the interest in science and intellectual property data analytics of so many companies, primarily for its stock's exchange performance. In 2021, the company made 75.4% more than it did the year before, thanks to its ProQuest acquisition that is expanding its research and academic support systems. That is why they expect a $2.84 billion revenue by the end of 2022. By 2021, CLARIVATE expects to run with $3 billion revenue. The question is, do you want to benefit from this growth in a year? If yes, invest now. Another company that has used subscriptions to make over $600 million in CARGURUS. We will tell you how their 31,000 dealers make more sales using their website shortly. Number 2. Icon. Icon is a leading clinical research organization founded in Ireland in 1990. Then it had 5 employees and worked from a small corner in Dublin. Notwithstanding the business model that assists pharmaceutical companies in commercializing and developing their products and services, has grown to over 40,000 employees through 30 acquisitions.
Greedy much?
The last famous acquisition was PRA Health Sciences, a Virginia anti-inflammatory drug producer. The icon revenue is expected to grow about 8% annually to roughly $10 billion in 3 years. That starts with a $7.91 billion revenue by the end of 2022 and an $11.75 earnings per share. The industry will also grow by 6.5% annually by 2025. Icon is one of the best stocks to buy now because demand for its services is high, especially as newer variants of COVID-19 and others like monkeypox and Marburg threaten global healthcare. Subscribe to this channel if you also hope to see medication for these absurd diseases. It won't do much, but we'll be building a community. Number 1. CARGURUS. CARGURUS is a famous online automotive marketplace in the UK, US, and Canada. They display trucks and cars from several dealerships, with an average of 38 million visitors to their site. These visitors browse a catalog from over 31,000 dealers within the 3 countries. Most dealers appreciate the platforms because they allow both retail and wholesale secure and highly scrutinized transactions. They have a 21% market share in a $3 billion industry that keeps expanding. In fact, the company attracts sales 22% better than its 2 competitors attract and uses its tiered subscription to ensure that dealers can identify those ready to buy and those who are only shopping around. Their recent quarterly report indicated a 151% growth. Their assets are classified as valuable, and their stocks are profitable. As we talk about investing, crypto is one of the most brilliant ways to diversify. In a previous video, we share some tips on investing in NFTs. Watch Beginner 5 Best NFTs Guide Investing Tips.